The market is basically walking a freaking tightrope right now as everyone is waiting for Jerome Powell to come out less than 24 hours away to say what the heck the Federal Reserve is going to be doing, what the position is going to be, what their approach to interest rates is going to be looking forward for the next year. In today's video, I want to discuss that as well as talking about how Bitcoin is currently holding up and is there a possible dump coming if we get some hawkish news from the Fed. My name's Lark. I make videos on investing. If you like that topic, make sure to subscribe to the channel. Of course, leave some love on that thumbs up button. Let me know if you like this kind of content. Let's get into it. So financial markets are bracing for Friday's Jackson Hole speech by Federal Reserve Chief Jerome Powell. Everyone's expecting that he's going to signal, yeah, there's a continued need for aggressive interest rate hikes. Inflation needs to be combated. We know inflation is still stubbornly high. 8.5% inflation in the USA is still a crushingly high number, and it's only going to take a little bit of pressure to push inflation back up. We have not dramatically reduced all these situations that are pushing inflation anyway, right? There's so much crazy going on in the world right now with energy crises and food shortages and all supply chain madness. It could very easily spike back up, or at least stay high for a while. If inflation stays at 6, 7, or 8% for 6 months to a year, that's bad news. That's not good news at all. That's really high inflation when the target by the Fed is 2%. So we will see how the market reacts to this tomorrow. I think in a lot of ways, probably this is already priced in. The market is expecting for an aggressive tone, a hawkish tone from the Federal Reserve around interest rate hikes and all that stuff. So I guess unless it's much more aggressive and hawkish than the market anticipates, that's when we could see a real sort of dump happening in the market. And maybe we get the opportunity where he says, well, actually, I'm going to take a more dovish approach here. We're going to be much less aggressive moving forward. We think we're going in the right direction on inflation and interest rates and all that stuff, so we're going to chill out a bit. That would actually, I think, be very positive for the markets if that were to happen. I don't think that's the most likely scenario. We can also see the dollar still toying, this is the dollar index, the DXY, still toying with a potential double top scenario, which, if it were to play out, would indicate that the market might be getting ready to take on some more risk, which would be good for stocks and crypto. Now, before I get into talking about the Bitcoin charts, if you're not signed up to Bybit yet, you got yourself an account over there. You can get 0% maker fees. Yes, 0% fees for market makers, as well as $4,450 in deposit bonuses by using the link down below in the description to start your account. You can long and short all the top coins. They have huge spot markets for very popular altcoins as well, so do check it out if you don't have an account yet. Now, Bitcoin. I want to start off with the weekly chart here. We are trading once again under the damn 200-week simple moving average. This is the bear line, right? This is the bottom of any kind of hope lines that we have in crypto. Trading below that, definitely not awesome by any means. Now, our relief rally got us up above it for a short amount of time. That big, beautiful red candle, well, that just smashed us right back down. Now, this is our second major move under the 200-week simple moving average. But I want to actually go back in time a little bit, just briefly, to look at something that happened back in 2018. Now, we didn't actually go under like has happened here, but we did have a very interesting moment. So after the crash at the bottom of the market, we had a big rally. This was our relief rally back in December 2018. Everybody's like, oh gosh, whew, the worst might be over. And then of course, back down. We came to retest the 200-week simple moving average once again. So we had that double test that actually happened back here in 2018. We could be looking at a similar situation right now, just a bit more expanded. This has been a much more aggressive move under the 200-week simple moving average. Maybe we see another few weeks under that coming up. Now, I want to get onto the daily charts here for Bitcoin. So this is interesting. I think we could be looking at a bear flag scenario. So we are still maintaining that uptrend just by a sliver. So this line right here, this is our uptrend line at the moment. As you can see, we are just barely hanging on to it, but we are hanging on. We have hung on for the last few days here on top of this line. Yeah, we wicked below it, but the candle closes have consistently, well, mostly, except for here, been above that, so it might be actually holding up as this kind of meme line of trend support. However, let's just get that cleaned up just a little bit. We did get rejected here at $22,000 as we tried to rally up on the 24th of August, and currently looks like we are putting in a big fat bear flag. Now, if we get the price to rally a little bit higher, that will invalidate the bear flag thesis, but right now, that is looking like a potential bear flag setup, which means we could expect further downside. And of course, obviously, if we get some kind of aggressive stance from the Federal Reserve, that's going to be bad for equities, it's probably going to be bad for Bitcoin and a lot of the cryptocurrency market. Now, the key areas of price support to watch for the downside, $20,000, that big fat round number. Markets love big fat round numbers. 20K could be an important area of price support here for Bitcoin. That would bring us down by about 7%, which isn't all that dramatic. The next big area of price support is down to $18,000, about $700, $800. That would be about a 12% correction for the price. And if we were to see something more dramatic happen, an 18 to 20% correction, that could actually bring us back down to retest the lows, right? So the low came in here at $17,500 a few weeks back here in June. We could revisit those levels. You need to be psychologically prepared for that. Again, hope for the best, prepare for the worst. And actually, what if we just go back in time here a little bit once again? Because if we look back at what happened in 2021, we actually had a similar situation where we had our initial sell-off, but then we actually had a lower price point come in a few weeks later. So on the 19th of May, we came down to $29,000. Then on the 22nd of June, we came down to about $28,500, plus, of course, another low in late July, although it was slightly higher than the previous one. So that kind of market structure would not blow me away in this current situation. I'm not expecting us to come down to like, $3,000 or some crazy stuff like that, like some bears are, but we should have these lower areas of price support on watch if we fail to hold up on our line of support, and if this does end up indeed bear flagging us down lower. So that's, I think, what to be watching for in the market right now. A break above $22,000 would be encouraging, and if we could get back above the 50-day exponential moving average at around $23,000, that could indicate a turnaround here for the markets. So those are the price points that I'm currently watching for Bitcoin. Anyway, you let me know what you think about all this down below in the comment section. Thanks so much for watching today's video, and peace out till next time.